Hello and welcome to Reading the Markets with Mike and Jane. Hi, Mike.
Hi, Jane. How are you?
Okay. Well, okay, we've got 2 weeks left in 2016. Right. What a year this has been.
Sure.
And just since the election, it's been amazing.
Right.
So basically, what do you think is going to happen final 2 weeks of the year?
So the last 2 weeks of the year seems like it's all been about, since the election, there was all these expectations about growth coming in. But suddenly it feels more to me, more like anything, like a chase for performance at the end of the year. Like everyone's scrambling, trying to get their numbers up into the last couple weeks, which of course makes me nervous going into January because, you know, how much of this is kind of fluff going into the last couple weeks. Yeah. And, you know, if you look at, I use this thing called Eureka Hedge, and they have a hedge fund index that tracks, you know, hedge funds' overall performance, and it was like up only about 3% through the end of November, 3.5%. And basically the S&P total return was up something about 11 or 12.
Okay.
So when you really think about that, the hedge funds have a lot of room that they need to cover and ground to cover over the last couple of weeks to try to pull those numbers up.
Well, and this market, since the election, has given no opportunities to get in. There's been really no selling since November 9th.
And it's almost as if there's been an absence of liquidity in a sense, right? Because there's no one selling stock. And everyone that's been selling treasuries and yields have been creeping higher. The money seems to be pouring into the equity market at this point, but the question remains is how long does this rotation always last? Yeah,
well, do you think we're due for a pullback?
I think in the beginning of January, I wouldn't be surprised to see something. I don't think we see something as severe as we saw last January, but I wouldn't be surprised to see the market pull back, you know, 2, 3, 4% to start the first 4, 5, 6 weeks of the year.
We're up 8% in the Dow. In the past month or so, 5 weeks. So, okay, real quick last question. So small caps have outperformed really just about anything else. Do you see that continuing?
Yeah, I mean, I think small caps are going to continue to do well for the balance of this year just because those offer the most growth potential going in. And they obviously offer the most, you know, they have the higher betas, the higher volatilities, the bigger percentages, chances for them to continue to move. You know, obviously that all, you know, what goes up quickly also comes down quickly. So it's something to be cautious on going into.
And they could also benefit more, I think, from the deregulation that we might be seeing in the Trump administration.
That's true too, right? Because they're the ones that are more likely to benefit from any small changes happening in the economy.
Okay, thank you so much, Mike. And thank you as well for joining us on Reading the Markets with Mike and Jane. Don't forget to like and share and comment. We'll see you next time.